Today's Thursday, July 21st of 2022. And we're looking at the ES right now. So this I created on Tuesday. So these were some levels. And so Tuesday we were down at 38.72. And as we can see today, we've climbed. So this is an old chart I'm showing right now. But as we can see today, we've climbed all the way up to this area, this 39.50 to 39.68 area. So I'll show the updated chart. Let's see. Yeah, right here. So that area, that green area, is this green area. So we've, from Tuesday, Tuesday was back here. Okay, and so we've gotten all the way up to this area. All right.
Okay.
So we were there, and now we're here. So we were there, and now we're here. So this is the area where we're likely to fall from. And as we can see, we've been struggling here the last 2 days, and we're starting to fall. So just add the session break line in there. Okay, so this area, it could be messy, every time we get to a major resistance, and as you can see from my chart the other day too, I had nothing above there. So that's as far as I saw the market going. If it breaks that, we're in what we call discovery territory. Well, we're not actually. There's more resistance areas up there, but I couldn't see it breaking that this week. I actually didn't even think it was going to get up there, but I was thinking if it did get up there, that's about the highest it'll go. And that's why I didn't put any resistance areas above it. And so that's exactly where it went. Right up there, and it's, struggled up there, and now it's starting to push down. So anytime we're in a major resistance area like this, let me do that again.
Oh shit.
Okay. Anytime we're in a major resistance area like this, and then let me put a box from here. And then we get these humongous red bars coming down, pushing down. That means we're going to drop. So how far we go, we could come all the way back down to the previous areas, So now, previously, this was a resistance, and now these areas become all support. Everything below it. So everything below all the way down here, these are all support at this point. In support, we usually make, kind of a red color or red shade. So I expect it to get here. It could go lower, obviously, but
how far back are you going?
Oh yeah, good question. Let me pull that up. So let me pull this into view. So I'm using as far back as I need to go. So, this to 2021. Back in January. No, back in March of 2021. Just wherever we saw previous levels. But I don't use NinjaTrader for this. I use TradingView, which TradingView is free. So I recommend you to use TradingView because it gives you a further back picture, a lot nicer. For NinjaTrader and programs like that, I guess they do too. but for some reason it's just a little smoother, a little nicer on TradingView. So anyway, yeah, I'm using TradingView. So, you know, we got levels from way back that we can compare to levels currently. Does that answer your question?
Yeah.
Yeah. So here's where we are. We're using the 15-minute tick chart here just to look at the overall market, and you know, I kind of see where all that is. So I'm gonna get that out of the view. I do see us getting some kind of bounce from this yellow area. Okay. So I'm using the 500 tick chart. And this is a tool I want you to get comfortable with. It's called the regression channel. And if you come here, it goes regression channel.
Okay.
So you can use Control F10 as a shortcut. But we just want to always get an idea of where the market is trending. So as we can see, it was trending down here. So let me just actually show you how I drew these up. So, you know, I can see that it was trending up to this point and then it started trending down there. So at that point, I'm just gonna pull the regression channel. You know, technically we can actually just pull it all the way here too. Yeah, we could just pull it all the way through. But within that, you know, sometimes there's these little micro trends that happen. So it can get what do you call it? You just want to get comfortable with it, basically.
Okay.
But what we want to look for is, you know, let's say it was trending up towards the top. I want to see a breakdown and pull back somewhere towards the top. This is where we would look for a short trade. You know, we probably take it until we reach this area, the midline area, or else we target the bottom of the trend channel. So that's a simple strategy that you can start adding to your, you know, your strategy. That's pretty effective.
And that's the digression.
Yeah, regression channel.
Regression.
If you cut, yep, if you come here to your tools, you just, oh wait, I think you're on NinjaTrader 8, but either way, it's on your tools, and then you just look up regression channel. So here's the thing. It's trending until it's not. So for example, before, right, it was trending up here. It was trending until it broke out and then started trending down from that point. So early in the trend, these are the key areas to look for possible entries. But late in the trend, it's likely going to break. So same thing, as it's trending down earlier in the trend, this is where you want to look for possible short trades. Late in the trend, especially we're at a support area right now. Just color it correctly. This is where we're actually going to look for a break to the upside. Possible break out of the trend and a move back, some kind of bounce back up from here. So it could be a sideways day. Let's see. It could be overall sideways today, because we're in that area where, put this here. We're in that area where it's been sideways the last couple of days, but it could remain sideways. Eventually, when it has enough strength to break down, if it's gonna break down, then it's just gonna fly through. Just like it flew up straight, it's gonna fly down straight. So it's gonna be a big drop if it's gonna fall, because there is the possibility that it holds here at this area and we get another big run up. So all we can do is look at what's going on and analyze it and trade based on what we're seeing until conditions change. So far, we ran all the way up here. We got stuck. We're in a sideways market and we're starting to move down. So we're bearish, right? Bias is bearish. Hold on. Yeah. And so unless this thing breaks above and stays above that green box, then we'll be bullish. But until then, we're bearish because that's what we have in front of us. Let's see. So with that, yeah, right now we're at a support area, 2 support areas actually, this one and this one. So I expect it to hold at one of these 2 areas and then make a run back up, actually break out of this trend channel, regression channel. So I expect it to break out and make its way up, and then we'll catch it on the way up if it does that. So I want to see it break. Let's change this color. I want to see it break up, pull back here, and we'll catch it on the way up if that happens. Any questions?
No, not right now.
No? Okay.
I'm just kind of watching what you're doing.
Yeah.
Just look at my screen as I'm looking at your screen, but I think some of these are like pictures, or is it real life? So like this 15-minute chart that you were looking.
All of these are live. Oh, well, the old one is not live, but this one is live.
Okay.
I mean, when I was showing you the one from Tuesday, that's not a live chart.
Gotcha. Okay.
And what's that green one?
Green?
Yeah, you got that one right there, the one that your cursor's on now.
Oh, the black chart? Does it look green on yours?
Yeah, it looks like. Oh, there you go. Yeah, the black chart with the green area.
Oh, okay.
Yeah, you had it zoomed in, so it was like green screen.
Oh, okay. Yeah, so this is it's a 2 Renko chart. So Renko is a different kind of bar that haven't really gone over with you, I don't think. But it just smooths out the picture, and I can explain more about that another time. But all right, so if you want to, we can
So then this chart, so now you have a 500 tick chart, and then you had a 15-minute chart.
Yeah. Okay, if you want, let's take this trade together. Oh, a little late on that entry. But our target will be 46. Our stop will be right under this thing. So almost a 1-to-1 risk reward. So we got in at 40.50 and our target is 46.50. So roughly 6 points. 6 points in micro is I think $30, and then in full size, which we're looking at, is $300. So eventually, right, the goal is to trade full size, not just micros forever, but stay with micro as long as you need to. But you want to get really good at micros, and you'll make the real money when you start trading full size. But once again, it's something where we can't skip any process. We can't skip simulation, go straight to micros. We can't skip micros, go straight to full size mini. So but once we do good at each level, we transition to the next level, and it's a smooth transition.
Hey,
Most
Just-
what's that?
So my thing is crazy. Okay. So my chart is not, it's loaded, but it's not live, which is weird.
Oh yeah.
Like it just
Oh,
stopped.
so you didn't get a chance to hop in this too?
No, I didn't.
Okay, that's fine. Well, I mean, you can
I went
see-
to I went to do it and it said it, but then it wasn't moving up and down when I was looking at yours like the way it was, and then I'm like, why is it stopped?
Yeah, that's weird.
Because
But either way, you can see the trade, and then, you know, we do these kind of trades all the time. So I mean, you miss one, no big deal. Many more trades ahead. So
well, that's yeah. Here, let me start over.
yeah, and you can see the profit amount here. You know, so I mean, literally, you could get out anytime, right? Over $200, I'd say take profit anytime.
So then you don't even use the trading chart. You just kind of
You mean the trading dome? I think you're talking about, like, I'm using the oh yeah, I do. So I trade on a different chart. So I'm using a different chart to trade, but this is just to display the trade. To execute the trades and everything, I do use the trading chart, but once
Okay.
again, this is just to display, because I just want you to focus on the trade, or yeah, what's going on the charts.
sure.
Cool. So that trade was a nice trade, and here's the stats, right? So we entered at 3940.5, we exited 3946.5, so right on the money, like exactly where we wanted to enter. I mean, we actually entered late, if you recall. So I actually wanted to get in earlier. It filled us a little late. It ran kind of fast. So
Yeah.
but however, you know, it's still a nice profit. It's a what was this, a 5-minute trade, $300 in 5 minutes, you know. And this is where you can be, like we can all be, once you have all your setup ready, and once you've moved beyond simulated into micros, once you've moved micros to regular size, then this is the final stage where you're trading the full size minis. And the if we look at the points, this was 6 points. All right. And so I just want you to focus on points. Just get your points. So making money, just know and trust that that day will come. But there's stages you have to get through to get to the point where you're making money consistently. Because anyone can just trade and make money randomly every day. But how can you do that day in and day out consistently without blowing up your account, without losing a whole bunch?
Right.
So, I'll just go through it, stages of trading. Simulated 2 is micro. Three is mini full size. So you have to prove to yourself at each one of these stages. All right, like you have to have shown yourself that, oh, I'm simulated trading, I'm making good decisions, I'm taking high quality, high percentage trades, I'm disciplined, I'm patient. And you prove that to yourself, I'd say minimum of 2 to 3 weeks straight. You might not be perfect, but you're pretty close to perfect. I'm not talking about how much profits you make. I'm talking about your performance. You're performing very well, following your rules, your plan. You're not chasing money. You're not breaking strategy. And then you can move on to micro trading. Same thing, because you can't simulate the live market. I mean, you can do simulated trading in the live market, but you can't simulate the emotions and everything you're going to go through when your money is on the line. But you're going to feel that in the micro trading. But what's nice is you won't risk a lot. So you're still not at the point where you're really making money yet. You're just proving yourself. And then once you've proven yourself in micro trading, and then you do what we did today, full size trading, and this is where you make the real money. So even in micro trading, don't try to make money here. You're not going to make anything serious or anything. Just work on your strategy and your performance. Because once you have that down good and you transition here, you just keep the same performance, the same habits, the same strategy. You don't do anything. It's just simply switch it from MES to ES. Don't change anything. And if you're doing good here, this is going to convert into real good profits like we saw today.
Okay.
So this is where you make the money. But getting here is the part that most people don't want to work towards. They just want to jump. They don't want to skip this, and get into this right away. And this is where they lose all their money. So we want to be careful about trying to skip step. That you can't in trading. You just can. You'll experience it. I can say it, but some people need to actually go through it to believe it. But everyone's gonna realize in the end, you can't skip any steps. You skip a step, you're gonna struggle, and you're gonna realize in the end, yeah, I should have spent more time making sure everything was good here before I moved there, and be good there before I moved here. So, and people, they want to skip this and go straight to that. They're gonna struggle there, and then they're gonna realize, yeah, I should have went there and made sure I was good, and then I'll transition over. So, and I think that's what takes people a long time to get good at trading, because they're trying to skip steps. You know, they haven't proven themselves for a minimum of 2 to 3 weeks in simulated, and they're already jumping to live trading. So they struggle and lose money, and then they realize, yeah, I actually have to go prove myself now. The same thing. Maybe they prove themselves in simulated, they go straight to micro and they struggle, but they're in a rush to make the money, so they jump here and they realize, oh man, I should have proven myself in micro, and they lose a bunch of money and they go backwards.
Hey, Bong, so can you walk us through the move, and then can you also explain like what your strategy plan was?
Yeah. So this is pretty simple. Let's start back here. So we want to see where the trend is, use the regression channel. And let's say this was a resistance area. So I'd be looking for the market to turn around at this point, right? So I'm looking for it to break out of the trend channel, pull back, and look for a possible entry right there. That's a high percentage entry. Have you guys seen that pattern before? It's just basically like a two-legged pullback, which is a very popular pattern in trading. But
Yeah.
it's nice because it pulls back under the trend channel.
Yeah, I think for me, like, because I'm trying to look at the time frame, right? And the time frames are really close. Like, it looks like it's 3 minutes or something, or a minute. And so, yeah, I usually don't look at this time frame,
okay.
but
So
I'm following what you're trying to
Sure.
say. But yeah,
So so this is a 500 tick chart.
Yeah.
So this is not a minute chart, this is a tick chart. So this
Okay.
500 ticks. So do you get that?
so how many ticks are in a minute? Like, is it like
Oh,
60
so
ticks a minute or
I
something?
think I've explained last time, but this is not based on time. This is based on movement. So
Oh, got you.
let's say it's a slow
Got you.
day.
Yeah.
One 500 ticks could take 5 minutes.
Oh, I see. I see.
So each bar is 500 ticks.
Yeah.
If it's a fast day, 500 ticks could be 2 seconds.
Okay.
So it doesn't account for the time. So for
Yeah.
example, on a 5-minute bar, that could be 5 minutes, right?
Yeah.
And it'll just show like maybe a green bar or a red bar. But with a tick chart, I see what happened with the whole time within that time frame. Okay, actually this is good. So this is the idea behind, behind the entry, right? So entry strategy is very important. Why would you enter where? So my entry is breakout, pullback, and retest that same line. And this is the
Okay.
entry before it takes off. All right, so that happens, just like this. Exactly like this is what I'm talking about. See that? It broke down, pulled back, and then it breaks away. So we don't get in on the breakout, but once it pulls back, retest that same support line,
Oh, gotcha.
and then that's the entry. So look at the real chart. That's exactly what I'm talking about here. All right, so it went down, retested this support line. So that's where we look for an entry. And then as you can see, nice big breakdown, right?
Yeah.
Same thing the other way. So we did that same exact trade, but we did it the opposite way. This was the trade we did earlier. Right there. So, you know, it broke out a bit here. It came back. And then it took off. So we got in around here. We actually got in late. I tried to get in. I tried to get in here, but it went so fast. I got filled up here. But even with a late fill, we were still able to. It was still able to get 6 points, which converts to $300. $300 move. And then we can see it even went more than that. Look at that. This overall, this is like over $1,000 move, but we didn't know it was gonna go that far. Number one, and number two, we don't need to be greedy.
Right.
But yeah, so entry is very important. And entering, I'm sure you guys see me type it before. High percentage entries, high percentage targets equals winning trades. So the key thing here is high percentage entries. This is the part that most people can't get right. They're not getting in high percentage entries. We got in a high percentage entry, right? This was my support box. I already drew this box ahead of time. And I already told Tomas from the beginning, we're gonna, if it breaks back up from here, we're getting in. And it did exactly that. It broke out, came here, and we got in. It's high percentage. So high percentage means you've already got your parameters set, you've mapped it out, and you're just following the plan. Low percentage is like you're just looking in the market, you don't really know what's going on. Let me just try to do a short right here. Let's, you know, let me try to hope that it'll go in the direction that I'm hoping. You know, there's no plan to it. Or there's a plan that maybe you've never tried and tested. A new idea you have in your head that you don't have enough back testing to support if it's a strong trade or not. And you're just trying it out. That's a low percentage trade. You don't want to put your account at risk for low percentage trades. You know, especially not in the live market. Everything you do in the live market, it has to be something you've simulated enough times, has worked enough times, and then you've done micro trading. It's worked enough times. All you're doing is switching from MES to ES, and at that point, it's all good profit. So yes, once again, everything's a process. We can't skip any step of the process. The trade I did for you today, that's a trade I've been simulated. I've been tested all three levels. That's why I confidently did it. But anything outside of anything I've done on all three levels, I will never do in the live market, and I will never show you. If it's still in beta stage, you know, where I'm still testing it in simulation, then I'll never do that in the live, and I'll never show you that. I have to have tested it long enough, and testing can take months, you know, because you have to work out the kinks. When you have an idea, you have to test it out for a while, and it has to have proven itself in multiple different market conditions. You know, you have to know the ins and outs. You got to know the weakness of your strategy and plan, and you have to know when to avoid trading. So a strategy is complex. You know, it's not as simple as you know, just where I entered. That's just one step in the overall plan, you know. If we only wait for high percentage trades, like if most people stuck to this formula, they'd be profitable every week, every month, or most weeks, most months. They should be profitable every month at least, but they should be profitable throughout the week. By the end of the week, they should be green if they're sticking to this. And high percentage trades are not very often. You know, they don't happen all the time. Let's say we only caught 2 of these high percentage trades. Well, that's a nice $600 pull for the day. We took one. Let's just say that we only caught this one. That's a nice pull for the day. And we just wait for the next day. Do the same thing. But let's say we catch 2 of these in a day and we only trade 2 days a week, or we only caught 2 of them during the week. That's $1,200 we made in that week. You know, so all the low percentage trades, that eats into our profits. Because now we're putting ourselves at risk for something that is not likely to turn out favorable to us. And now we're stuck in a battle back and forth, right? Unnecessarily. So less headaches when we only do high percentage trades.